Right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Happy Friday to you, and it's about that time. It's that time to get this party started and get ready for today. So let's talk about the euro dollar first and foremost. Okay, that's a weekly chart, by the way, if you want to know what chart you're currently viewing. It's a weekly chart. You can see like the bigger flag pattern that we have in play, a big rejection on that squeeze up to 117, hit that purple trend line that you can see up there, pink, fuchsia, whatever color that floats your boat. You go into the daily chart and you can see, the euro dollar is currently trying to work a flag pattern. We noted that a couple of days ago, tweeted out the chart. I didn't think Draghi was going to be as dovish as he was yesterday. I mean, obviously that caught, it wasn't just me that it caught off guard. It caught a lot of people off guard. And, many of you all already know that I was long the euro pound, thinking, thinking, no, he's not going to beat down the euro. I thought he was going to actually kind of talk up the euro dollar a little bit, because knowing that the Fed's probably going to be raising rates soon, to kind of soften the blow when the Fed actually raises rates. Well, the opposite happened, and caught me off guard. I spent all day yesterday chipping back. And if you were with me on the Lunch Money webinar yesterday, I was really happy at the Lunch Money webinar because I really made back everything that I lost. And those comeback days are big days, as a trader. When you're down and you come back and you dig yourself out of a hole, and that's how I felt yesterday. Today, a little different story. Different story that pulled some really great profits out of the market already this morning with the pound yen, but a different story with the euro dollar, because now the euro is basically back to its breakdown point. If you guys are watching a move up to this 111.55 previous support acted as current resistance, we went as high as what, 60? Basically got our head above that resistance for just, I was asleep, but maybe 15 minutes, 10 minutes, and got swatted right back down. Now, like I said, I'm short the euro. Matter of fact, you know what I'm going to do right now? I don't even want to deal with it. So I'm going to take my 2 pips off the table and be done with it. It was actually 1.5 pips. I just flattened the trade. I don't even want to deal with it at the moment. But if you look at the euro dollar, we stalled where we needed to stall. We stalled where you would expect us to stall. This was a 618 retracement. That's why it was so big when we broke it yesterday. And you can see that's really giving us, all sorts of issues at the moment. Now, if we get some sort of rally because of a weak jobs report, okay, what Paul was saying earlier this morning, and I agree with, any move back up to 112, it's 112 to 112.10. This is going to be a great opportunity to be on the short side of the euro. Okay, if we can get up there. I personally, now I'm not going to have any dollar exposure going into the jobs report. I'm not. Okay. If we have a weak jobs report, I want to use that as an opportunity to short the euro dollar at a higher price. Okay. Now, the reason why I'd want to do that is because I personally think that the euro, based on what had happened yesterday, is now a sell-on rally currency. What Mario Draghi said yesterday is, without saying it in these words, we'll do whatever it takes, is we haven't done enough, or there's more to do, which basically says, listen, everything's coming in below expectations, and we have to be more aggressive with our monetary policy. So regardless of if we have a semi-weak jobs report, when I say semi-weak, let's just say go with the example of what we said earlier this morning. If we create 170,000 jobs, great. Hopefully the euro pops up to 112. I'm going to sell it. We'll do it. I mean, you can do whatever you're going to do, but when we cover this live, if we get up to 112, I am shorting the euro dollar. So I'm telling you what I'm going to do ahead of time, which I always pride myself on. I plan my trade. I plan my trade and then trade my plan. So if we get up to 112 today or thereabouts, I'm going to be selling the euro, and I'll do it right here with you guys. Not saying that's something you should do. I'm just saying that's my plan of action. You guys can do whatever floats your boat. But I am looking for a move up to 112 in the event we get a weak jobs report. So resistance 112.10. That's key resistance, and I'll be selling right into that. I do believe we're going back into a bearish bias now. We've been in a range environment for a while, for the last couple of weeks as we, popped up, and we've kind of been in this range environment for a while, but no, we're going back into a bearish environment. And as long as we stay below this 112, I think we have to stay, sell on rallies. Okay. Now, how about if we have a strong jobs report? Well, then, 111 is at risk, or 110.90. And if we break through 110.90, let's take a look at, and let me get rid of this flag, because this is confusing, so I'm going to get rid of it for now. And you can see that trend line that we're dealing with, and I'm going to keep this here so you can see the bigger flag pattern that's in play. We can obviously get rid of that too. That's irrelevant at the moment. Okay, let's take a fib extension from the last flag range that we were in. You can see we're at 127% extension. Okay, now if we break through this 111 or 110.90, well, then the risk is that we make a move to 110.40, okay, which is the 161% extension of the flag. So support 110.40, 110.90. Okay, those are two real support levels for today. I suspect if we break through the 110.90, we're going to see 110.40 promptly after that, pretty quickly after that. All right, and if you're on the short side of the euro, let's say you got short the euro yesterday and you're looking to take profits, I think somewhere down here is a great place to take profits if we get euro weakness today. Okay, let's go over to the cable. So the pound dollar is weak, continues to be weak. Earlier this week it was trying to make the turn, but as you guys probably recall from Wednesday, I'm like, well, as long as we stay below 153.30, it's bearish, and it continues to drive lower. And the scary thing about the pound right now, this is a bearish wedge pattern. Do you see it? Alan Greenspan's on CNBC right now. He's very tough to listen to these days. My God. Whew. Scary. He's no spring chicken anymore. Okay, but you can see that we've got this like nice little bearish wedge forming. Let me get rid of a lot of this stuff. Remove that, and I think we can get rid of a lot of these lines that we've got drawn out here. Hold on. Let me just delete some of them just to get them out of the way. We need that one. We don't need that. We've blown through the 50% retracement on the weekly basis. That extension, we don't need this fib anymore. We don't need this line anymore. Okay, that's good. All right, so now this is what I feel is really key support. This is the 161% extension, and I believe, if I'm not mistaken, it's the 127% extension of this move, so we need them both. Okay, so you can see how key support is down here. Now, if we get a push, like let's say we get a strong jobs report, the euro drops to 110, let's just say it gets down to 110.40 or 50, okay? If the cable drops to 151.80 and you're short, you have to be really careful, okay? First of all, we have 127% extension of the July to August highs, 127% extension. The August lows to August highs, 161% extension. We have the horizontal support that's right there. So we should find some really critical support at 151.80. Okay, it's been my target all week. It's just it's been kind of slow going getting there, but it's been slowly getting there. Now, let's say that we do rally, we do get some sort of relief here. We have to get all the way back above 153.30 really to get this out of this bearish trend that we're in. Okay. So 153.30, 53.30, that is key resistance. And this is going to be key support too. That's why I put the asterisks there. If you guys don't know why I put asterisks, because they're very important support or resistance levels. All right, let's go over to the Swissy. The Swissy, just ridiculous. I'm so upset how I traded the Swissy. It's like, you know, when people say like nailed it. Well, I mean, come on. If you look at how I traded the Swissy, a month and a half ago, nailed that thing. You know, it was 94.20 when we came out of like this downtrend line here. Got long a truckload of dollar Swiss at 94.20. Rode it all the way up, selling it along the way, adding to it till we got to 99 cents, and then that's where it all went wrong because when we were at 99 cents, I didn't sell everything, and I knew I should have. We talked about it that day. We talked about it the day after. And then I lived through this entire sell-off. We bounced to 94.50. I finally sell everything, thinking, thank God I got out of that. And then it rips all the way back to where we're currently at. You talk about trading it so poorly over the course of the last month and a half. The last couple of weeks. I'm so upset at myself the way I've traded the last couple of weeks. Even though I made so much money last quarter, in the last few months in the Swissy, this last couple of weeks have really just irritated me. And the thing is I haven't been trading it, but it's knowing that every dip that it takes, I've been wanting to buy it, and it just is not dipping. So that's probably one of the more frustrating things about it. Okay, so let's talk about the Swissy here. First and foremost, the Swissy has key resistance at the 786 retracement, which is obviously stalling it, and even just above that, we're going to, you got horizontal resistance, which all comes in right here. Okay, very, very strong resistance at 98 cents. 97.60 is a 786, that's holding us, but even if we get up to 98 cents, it's still going to be, horizontal resistance. So 98 cents, 98. Okay, support though, this is key. This is really critical, I believe, because if we break through this support here, all through here, the breakout point, horizontal support, all those spikes through there, this is an upper sloping trend line. We break through this, which comes in at basically 96.90. That starts the bigger retracement, maybe ahead of the FOMC. Okay, so we'd have to have a pretty negative jobs report. The stock market would have to be under pressure for us to do that, but that is definitely doable. Okay, 0.9690, that is key support. We break through that. We break through that, we're going to slip right back into this range. I think it is a range. It's a big range. It's very annoying range. As you guys all should know, that in the event, one of these days, we're going to break through this downsloping yellow trend line that's had us, pinned here for the last couple of decades. We break above 99 cents, it's off to the races. I mean, the day that the Swissy breaks 99 cents is the day that I have to chase it higher, and I will. I'm hoping it's not before the FOMC in the next couple of weeks. I'm hoping it pulls back to 95 cents the next 2 weeks so I can get long. I'm just saying that, I have no position in the Swissy. I really want to be long the dollar Swiss. I just have no position right now. And I'm not going to obviously do it ahead of non-farm payroll. Okay, let's go to the yen. So the yen got swatted down overnight. There's a couple guys in the chat room that did really well with the, pound yen. Rick, he was short the Swiss yen, euro yen overnight. He closed out those positions. I closed half of my pound yen off. It's been, it's really, really good move. in the dollar yen. Now, the dollar yen is at a 50% retracement. Okay, it's at a 50% retracement of the spike low from a couple of weeks ago to the high recovery high, which I had a lot of dollar yen short over the course of the last week, and I unfortunately haven't been holding on for this big move. I've taken 20 pips here, 30 pips there, and I missed this really nice slump overnight. But for the on the dollar yen, but you can see how critical this support is now. Okay, critical support. Let me grab this. That all comes in at 118, whatever the low is, 80. Spike low over here, 90. 118.80. We're going to be watching the dollar yen during the jobs report in the next 40 minutes. That's the currency that we watch when the news is released. If we break through 1880, that it is a horrible jobs report. That's all. There's no other explanation. If the dollar yen breaks through 1880 following the jobs report, it's a horrible jobs report, and the dollar is going to get spanked. That's the most sensitive currency to the jobs report is always going to be the dollar yen. Not always, but it is, and it has been for years. It's most sensitive to yields too, and really it tends to be the most natural or organically moving currency pair to the jobs report. That's why we always watch it, and to most U.S. data as well. All right, resistance though for the dollar yen. Okay, so where is resistance now? Here's the hourly chart. So to take off the downside pressure now in the dollar yen, okay, you can see spike low, spike low. I mean, we'll have to get above 1965. We'll have to get back above 119.65 to take the downside pressure off. The dollar yen, as we've had marked down for the last several days, or last week and a half, is bearish. But, obviously we're sitting on pretty key support here. Now let's go over the Canadian. We have the Canadian jobs report today, and I don't want to take away from the importance of the Canadian jobs report. Canada is looking to create a couple thousand jobs. Now, basically, Canada is looking to come in line. The risk with Canada is that the jobs report comes in weak. There's been a lot of talk in the last few months of Canada slipping into a recession. There's been obviously a lot of talk about what the impact of weak crude prices are going to do on the Canadian economy. This talk, okay, all this talk and all this sentiment makes its way through the economy, but more importantly to the corporate leaders of the Canadian economy. Okay, the employers. Like if I'm BlackBerry, and all I'm hearing is Canadian recession, and well, BlackBerry's already got its own problems, but if whatever Canadian company you're talking about, and your leadership, in one of the managers or vice presidents or of your division, and all you hear is recession and weak crude oil, it's going to weigh on our economy, and it's going to make you think twice about hiring new employees. So it's like kind of a self-fulfilling prophecy, if you will. But sentiment's really turned sour on the Canadian economy in recent months, and I'm worried that it's going to weigh on Canadian jobs soon. And we haven't seen a huge impact yet, but I'm always thinking in the back of my mind, it's coming. It's coming. And so the question is this this Canadian jobs report, is this going to be the one where we see like we see Canada, instead of creating a couple thousand jobs, are basically coming in flat? Is this the month where Canada loses 20,000 jobs and everybody goes, oh crap, here it is, right? So we're going to have to watch Canadian employment. It's 6.8% is unemployment rate. Let's hope that doesn't tick higher. And we're supposed to create we're basically not supposed to lose any jobs in Canada. So as you can see in the Canadian, we are in a very tight range. And I'm telling you guys, this breakout's coming. Now, it should be an upside break. I mean, when you look at the trend, this is a tight triangle consolidation, or a tightening triangle consolidation and uptrend. It should be a continuation pattern up to 135, basically. That doesn't necessarily mean it's going to. I'm just saying that the probabilities are for an upside break. Now, what's gonna suggest to me that we're seeing an upside break or a downside break? Simple. Okay. See these red lines that we had from yesterday? We're going to narrow that. See, if we break above 132.90, it's an upside breakout. If we break below 130, it's a downside breakout. Now, and that would be a pretty massive downside breakout too. So now that range is tightening. The apex of this range is tightening. We're getting closer and closer. So now the resistance is 132.90. Key resistance. Support is 131.30. And I am long the Aussie Canadian right now. Okay. I am going to keep it through the Canadian jobs report. I made enough profit in my pound yen to really offset any loss that I see in the Aussie Canadian from here, so I'm not really worried about it, because it's not a huge position anyway. But I don't mind having the exposure. All right, let's go over to the Kiwi. The New Zealand dollar. Okay, we rallied yesterday to 64 cents. Didn't we write down 64 cents as being our resistance yesterday? Yes, we did. Okay, that continues to be resistance. Shoot, I'm trying to grab the end of it. There we go. No. Damn you, red line. There we go. God. I was going to go Harry Carey on somebody there in a moment. All right, so we spiked to what we did spike to 64.13, so 64.15 is really now resistance. Support is obviously 63.15. We are range bound. Some of you smart traders were shorting the Kiwi at 64 cents yesterday, and I didn't take advantage of it, and I saw so many of you doing it. So many of you asked me, hey Blake, should I be shorting the Kiwi up here at 63.95? And I'm like, yeah, I mean, if you're going to sell it in the range, you do it up here. But I didn't do it, and for those of you that did it, congratulations, good trading. I didn't take advantage of it. Been a little bit, like I said, yesterday I was a little focused on the euro because of the way it was moving, so my focus came off the Kiwi, just because I was just trying to, I had the shovel in my hand, and I was trying to stop digging and trying to dig myself out of the hole. So that's what I was doing yesterday, and I lost focus on some of these commodity currencies. All right, Kiwi is still bearish, and it's still bearish while it's below 64 cents. When we come back, we're going to do the Aussie, the dollar index. We'll take a real quick look at the peso, the Swedish krona, the Norwegian krona, see if anything's happening there. I'm going to go grab some more coffee, so don't go anywhere. I'll be back in just a few short minutes. Thanks, everybody, for being here. Happy Jobs Report Friday. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. We're going to finish up what we're doing here. The euro is getting a little bit of a pop. Kind of glad I'm out of that short. It's getting a little bit of a pop higher into resistance, but again, trying to trade this ahead of the jobs report is it's very dicey. Let's go over to the Aussie really quick, and Here's the Aussie dollar, and we hit the 127% extension overnight. I noticed that when I was out with my son playing soccer last night at his practice. I was looking at quotes. We were out really late. Actually, I basically left practice, went to Chipotle, grabbed food, ate, looked at quotes, went to bed. I mean, it was a pretty late night. But okay, let's but what I did notice, and because I knew we've been targeting that support all week. I think every day for the last couple of days, and correct me if I'm wrong, on the bias chart, we've been putting down a support point 6970, right? That's been the number we've written down almost every day this week, if not every day this week. Okay. Well, we finally hit it last night, and matter of fact, we went down to 6960. But you can see even the hourly candles couldn't close below that. A bunch of dojis there, long wicks, and just kind of grind it back up. So I'm actually going to change the number now to 60. Uh, that's support. Um, Obviously on a strong number, the Aussie, it looks extremely weak. The Aussie dollar does. I mean, I'm one of the things that I'm most concerned with the Aussie. Let's take a look at this weekly chart. Let's back ourselves up a little bit. So if actually, we'll put it on the monthly chart, and then we can always go back to the week. Okay. So if you take the 2001 low, okay, 2001 low here, 2008 low, we are well below that trend line, which, here's a weekly chart, bearish. I mean, unless for some reason this jobs report is like, we come out, we create 70,000 jobs, and the Aussie goes from 70 cents to 71.50 by the end of the day. It'd have to rip up about 170 pips currently to actually show us a reversal. The Aussie looks very, very bad. Okay. The Aussie looks extremely bearish, and now it's trying to figure out where in the hell it's going to go. I mean, our extension that you see, the 127% extension, is just from the volatility that we got from a couple weeks ago. That was from the spike low to the spike high recovery. 127% extension. 161% extension comes in at 68.88. So 68.90. I mean, it's a lot of open air. I mean, there's not a lot stopping us. Not a lot stopping us. And we have all sorts of monthly and weekly fib levels. I mean, it points us down to 60 cents. And even in the Sydney Herald, they're talking about 60 cent. Jared, who's Australian, who lives in Spain right now. He's in our chat room. He gave me the article, from the Sydney Herald this week, and it's like they're talking 62 cents. I mean, it looks doable. All right. So anyway, going back to the Aussie. All right. So if we break through, the overnight lows, I mean, we're talking 69 cents. So that's why be real careful with this. Actually, I should do this. 68.90, just in case we break down. Okay, now what takes the downside pressure off here? I mean, it is not for a long ways. It really isn't. I mean, we'd have to get all the way back up here to take the downside pressure off. But we can also do this. Let me see, to make it yellow. Somewhere like that. Like I'm looking at this wick, those highs. I mean, I don't want to write this down, but I mean, I can. 70 and a quarter. That may be resistance on. If we get a weak number, 70.25. But man, it's bearish. Okay, let's go over to the dollar index. Okay, so here's the dollar index. And let's zoom in a little bit. So our resistance that we've been writing down all week was at 96 and a quarter. We broke above it. So now you can see the low, high, 618, 786 comes in right here. So our next resistance for the dollar is going to be at 97. Okay. Support will be yesterday's low, which will be 95, basically 95.80, but 95.78. So 95.80 and 97. We're still in a range in the entire dollar index, because remember, the dollar index is not just the euro, but we're heading back up towards the upper end of our flag, okay, which, as you can see, we're not dealing with right now, but this is something that we may be dealing with soon, okay, which would be, this is a very bullish bull flag pattern, okay, on the dollar index longer term. Okay, so that was the dollar index. Let's really quick take a look at the peso, and then I'm going to try to answer a few questions before this jobs report. So here's the peso. Not a lot has happened all week. We've talked about the support being at 1665, resistance being at 17, and I guess I can write that down again for those of you that trade the peso, because the jobs report could push us out of these areas. So 17, 1665. Okay, it's still bullish. US dollar. For those of you that trade it, I don't trade it, so but for those of you that do, 16. It's just because my broker doesn't allow it, or I would be trading the peso. Bullish. Okay, and let's go over to the Kimmy says Citibank we have not had an initial August print above 200,000 in NFP in 17 years. Yep, there's a lot of notes out there citing that August is seasonally weak for jobs. That's why there's so many people that are really thinking that we're going to have a miss, that we're going to miss the jobs report. We'll see. So there's the Swedish krona, really range bound. I had a trader who works as an analyst for a fund. He's like, man, the Swedish krona looks toppy on the weekly charts. And I said, my comment to him this morning was, because he wrote me last night, I said my comment to him was, it does, but the flip side is we had 1,000 pip rally in the euro. The euro went from 105 to 117, so it was a 1,200 pip rally, and the Swedish krona didn't pull back. Lacker is speaking. Thank you very much. Thank you very much, Patrick. And so Lacker says, we'll make final decision until he hears debate at FOMC. Both mandate conditions appear to have been met. Waiting too long could require a more dramatic hike. So he's talking up the dollar right now. Very good. Thanks, guys. I knew he was speaking this morning. I just kind of spaced it there. But anyway, what I want to point out about this US dollar Swedish krona is we had a 1,200 pip rally in the euro off the lows, and the US dollar Swedish krona didn't pull back. Take that into account, because if the euro starts dropping back down towards 108 or 105, is that the catalyst that drives the US dollar Swedish krona higher? Because a lot of people think it looks toppy. Not just that one person. A lot of people do. I don't know if there's a whole lot to do with it today on the US dollar Swedish krona, but let's go over the Norwegian krona. And you guys know you could say the same thing about the US dollar Norwegian krona, but I will tell you, this thing is nudged right up against its highs, and a $38 to $50 bounce in crude oil did nothing to the US dollar Norwegian krona. There's something to be said about that. Okay, here's your bias chart. It is done. So why don't you guys take a picture of it, uh, you know, so you guys can write it down.